Sandeep, hi, good to be speaking with you. What's your take on the insurance sector? I mean, it sounds logical to cut down the GST on the health insurance premium, but business-wise, would you be a buyer in some of these stocks?
The insurance companies tend to be slightly defensive in the market. So, at a time where uncertainty increases, the stocks typically tend to outperform. So, the possibility that they could outperform in the near term is greater. Although we've seen a significant, like HDFC Life's rise has been not so huge, but we've seen a significant rise in ICICI through Life already. So the case for an outperformance is there, but from a particular uh, absolute gain perspective, I think the valuations are such that we might not have very significant gains.
All right, morning. Let's get in your take as well, Sandeep, as given that we're celebrating World EV Day, there have been lots of strides that have been made in this vein. Lots more to go, but given Ola Electric's move since its IPO and a lot of other auto companies as well, really putting the thrust on EV, your outlook?
EV sales have been faltering as such. So because once the FAME incentives have gone away, what we've actually seen is that last 4 months that sales have been continuously declining. So that reflects that the shift towards EVs is not a natural shift at this stage from the consumer's end. It was more driven by pricing advantage due to tax breaks at various levels. And I think that's somewhat concerning. We've also seen from many European car makers in terms of statements that they are slowing down the EV transition path as the adoption remains lesser than expected. So I think that's a concern for pure EV plays at this stage. So, so broadly, automakers who are across the traditional autos and EVs combined, I think they are in a better position.
Sandeep, when it comes to the view on some of these IT counters, because I guess the kind of momentum that we saw did come as a bit of a surprise. A lot of those IT counters have now come off from those levels. But how would you look at the movement that we've witnessed in the last month and a half or so within the IT space, and what's in store?
So Indian IT companies, for various reasons, the performance is significantly linked to the Nasdaq movements. Also, as global tech stocks tend to have a correlation. Although in terms of pure fundamentals, there the move is more on AI, and here the move is more on potential increase in outsourcing. But like you rightly said, the move has been uh, much greater than what could have been expected due to potentially a 1 to 2% increase in growth rates, which these companies have indicated in general. So I would think that the near-term positives are all factored in, and until unless the companies indicate a further growth acceleration in October post the September quarter results, it's tough to make a case on a broad basis for a further move in the IT stocks.
But Sandeep, I wanted to shift focus back to the Indian markets, and one space which has been heating up is clearly the quick commerce space. Of course, over the weekend with the Ganpati sales coming in and the kind of data that we are getting from Zepto, Blinkit, etc. as well. But seems like Flipkart Minutes has upped its game. It's made its inroad into Gurugram as well, and then there was DMart as well, which was trying to make deliveries within 2 hours. What do you make of the intense competition here?
So the competitive intensity is high, but in terms of the number of players operating, but what has also come as a realization among many of these companies is that continuously making deep losses will not make sense for them. So in terms of delivery charges, handling charges, etc. So the charges have also increased, and the customers are paying that. So I think that's a positive in a way for many of these companies. So I think trends in profitability we'll have to track, but the trends don't seem to suggest that with increasing turnover and sales, now they will keep on increasing losses as was the case till a year or two back.
Also wanted your take regarding what's happening in the primary market. Bajaj Housing IPO opens for subscription today. Would you recommend a subscribe or avoid?
So Bajaj Finance uh, seems reasonable in the context of whatever IPOs are coming in. So I would think it should be okay. But I think the bigger concern remains the huge supply, like since you touched on it, because the supply in the market has become so huge on a daily basis that I think that itself would become a big concern for the markets. Like this week itself, there are 16 IPOs planned with 11 on the SME side. And on a daily basis, we are seeing almost 8,000 crores on an average QIP plus stake sale by promoters or PE investors plus IPOs combined. I I don't think the market has the capacity to keep on absorbing this kind of supply.
Sandeep, I look at Bajaj Finance simply from a different prism, and let's just wanted to encourage to spend some time on it. That here's a HFC which got incubated in 2017-18. It is not like a old legacy business of Bajaj Group. It is growing at a rate of 25% plus, which is double that of the industry average. And being a Bajaj Group company, they will have an advantage in terms of cost of liabilities. So do you think now for a lot of investors now this becomes the go-to stock in terms of owning an HFC rather than buying these small HFCs here and there which are PE backed or where PE investors want to sell their shares and they get the carry home? Just stay with this one because this is from Bajaj Group. It is growing and now they're the second largest in India after LIC.
Yeah, that's true because of the fact that the Bajaj Finance has shown the ability to grow much more rapidly than the overall industry. Now, Bajaj Finance as core business for the parent, they have more concerns because many of the loans tend to be small ticket or unsecured, etc. So, uh, at a time where concerns are growing on potential uptick in NPAs, there they could be more concerned. But housing finance tends to be a fully secured business, and as such, NPA concerns out there are lower. So, what you are saying could actually become a reality that this could become a preferred stock at a later date.
Sandeep, I want to go back again to that good old correlation. Weakness in dollar index translates into strength for commodity. I'll say it again. Weakness in dollar index has translated into strength for commodities. But that trade this so far has not played out. Any particular reason why commodities are not going up when the dollar index is down?
It's all about China, Nikunj, because China determines what happens to commodity prices, and the Chinese economy has been showing weaker and weaker trends. No growth uptick is happening. Inflation pickup is not happening in China at all. Their monetary policy has been so loose. Despite that, they have been unable to revive the economy. And when a country which consumes 50 to 60% of most industrial commodities, chemicals, etc., is not growing or showing a declining trend, there is no way commodities can show an up move, irrespective of the dollar correlation. So I think right now it's more about what's happening in China rather than what's happening on the US dollar.
Sandeep, I'll construct a scenario which is that globally the growth scare comes back. India does better, but liquidity continues, which is that whether it is domestic liquidity, whether it is from DII, whether it is from insurance, or whether it is from HNI. So when global scare is coming back and commodities are down and Nasdaq is down and tech is down and in India liquidity is strong, do you see a strong sectoral rotation which could be at play?
I think the concern is more, Nikunj, and which is not discussed so much, is about what I said earlier about the huge supply which is coming in. Supplies coming in of equity in general, which is most of the IPOs, etc., if you see, are at valuations higher than that of comparable listed company valuations. And the listing itself happens at a rate which is much higher than. So I think this is a bigger concern for the markets at this stage. I don't think the markets, irrespective of liquidity, have the ability to absorb the kind of supply which is coming in. Secondly, we have been somewhat resilient on most global falls. So if you see many of the Asian indices, they are now actually YTD negative, whereas we are still mid-teen positives. So, and that has taken our valuations much, much higher than most other emerging market valuations. So at some stage, the valuations also become a concern for the market. So I would think that we should proceed cautiously in the near term while looking for opportunities to invest longer term. As if the economy grows 7%, then obviously there'll be many companies and sectors which will do well. But near term, I think we should be concerned.
Note as well on the power sector with Goldman Sachs, and they're talking about the draft ALMM for solar cells, what a positive move it is for the likes of a Tata Power, Reliance, and it also signifies the government's commitment towards self-sufficiency. Just curious to getting in your take, Sandeep, as to how you're reading into this.
So I haven't gone deeply into what you said. So, but the only limited point I can make through the analysis of whatever is happening on the solar side is that the bigger players will be the ones which could potentially survive the potential price war, which is eventually going to come. If you see the number of people getting into solar manufacturing, the kind of supply which is building up, I think 1 or 2 years from now, we could have potentially a scenario where there is huge domestic oversupply. And to that extent, the larger players will be the one which could survive this onslaught which is going to come.
If you like this video, then like, share and subscribe to ET Now.